Takaful is a way of ensuring common risks by means of mutual and cooperative methods. However, when we see historically the growth of cooperatives and mutuals in other parts of the world, in Europe and UK or the United States, these have normally grown over a long period of time by involving communities and affinity groups. Now, when the Takaful industry was born, the recent Takaful industry was born in the 1980s, there wasn't that much time to grow them organically. So we had to invent a model which was both mutual at the same time commercially viable. And so we came up with what we term as hybrid models, which have large aspects of mutuality, but which also have something for shareholders or providers. And it is really this hybrid models which have both spurred the development of the Takaful market and at the same time raised issues which need to be addressed in the study of Takaful. My present area of expertise is in the growth and development of Takaful, which is the Islamic equivalent of insurance. Takaful is a way of helping communities to mitigate risk, and it is very close to the development of cooperative and mutual markets which have been witnessed in many other countries. However, most of the mutuals or cooperatives have grown over a long period of time and have grown organically from communities which have been related to each other and which have certain affinities in their interests. When the current Takaful industry was born in the 1980s, the Muslims were faced with a dilemma. Either they could wait and grow organically over a long period of time, or they could find some way of shortcutting and also preserving as much of the mutuality and cooperative nature of Takaful operations. And in this attempt, they developed what we term as hybrid models of operation, which had large elements of mutuality but also gave some room for shareholders and operators to operate commercially. And it is this hybrid models which have had two contradictory effects. On the one hand, they have resulted in rapid growth of the Takaful market. On the other hand, they have given rise to issues which need to be addressed in order to preserve the Takaful market or bring it closer to the spirit for which it is intended. The recent Ernst & Young Global Takaful report shows that there are at present 179 operators, out of which 149 are full Takaful operators, and gross annual premiums of the Takaful market are now running at close to $3.5 billion per year. The Ernst & Young report also estimates that the Takaful market, or the contributions from the members participating in Takaful operations, will increase to over $7 billion by the year 2012. Clearly, this is a big growth market, and we need to take stock of it at this point in time to see that it remains true to its original intentions. The first area of concern with the growth of the Takaful market is that sometimes too much attention is paid to shareholder interests and not as much to the interests of the participating members in the pools of Takaful. And this has resulted in several concessions by scholars in order to allow shareholders to make some share or get some profit share from the underwriting surplus, which essentially goes against the grain of a mutual operation. And there are attempts at the moment to try to steer shareholders away from that and develop models which will compensate them fairly from other sources of revenue. The second area of concern has been that Conventional insurance allows investments in a wide range of assets, and this brings in return which is used obviously to subsidize the business. With the lack of all the asset classes for Islamic investments, Takaful operators are at a slight disadvantage because they cannot make a similar return for similar risk, and therefore they have to operate on a very tight leash in order to compete with conventional insurance markets. Finally, one would say that for Takaful to grow, we would have to find modalities in which we involve members in the decision-making process of Takaful operations. Finally, we would have to find modalities in which we find ways of involving members in the decision-making processes of Takaful operations. In this way, we could resolve the conflict between shareholders and members in terms of both pricing the product, reserving for future losses or claims, and also distributing any surpluses to members. Now, Takaful operations at the moment are growing very rapidly, and we have the establishment of the first Takaful, fully regulated Takaful company in the UK, which is trading by the name of Salam Insurance, which has started to offer home and motor insurance at the moment. We expect that in the next few years, we will also have successful life operations in the UK and Europe. The global figures of growth of Takaful contributions underlie a process which is much more dynamic than one would have witnessed in Islamic banking. Takaful markets will grow much faster, and if, as we are beginning to witness, life Takaful begins to grow, then there is a steady stream of growth in this market, which will of course continue for a long period of time. So once the trend is established, Takaful markets will grow much more rapidly than Islamic finance markets, and therefore the other services which are needed for growing these markets will also become very, very relevant. In particular, one would see that human capital development and capacity development in Takaful markets will be critical. And it is here that organizations like the Institute of Islamic Banking and Insurance will play a critical role in training the people which are needed for servicing this industry adequately. When we are looking at the Takaful markets or insurance markets in general, the level of growth in these markets is not only related to the number of people. You have to look at insurance penetration rates, and also you have to look at GDP per capita of the areas in which it has penetrated. So there has been a study done by Oliver Weinman, which are one of the actuarial consultants who have been working on Takaful, to show that actually when you look at the combination of potential insurance penetration rates and GDP per capita, European Muslims may provide actually a bigger market than other significant markets like the GCC or Southeast Asia in terms of actual Takaful premiums which can be collected. So the potential growth for providers in Europe can be significant, and at the moment, although there is only one company, but when providers begin to think about it, they will look at Takaful as a much more promising area than Islamic banking itself. In fact, if we factor in the idea that both savings and pensions and pension-linked savings can be adequately provided through the Takaful modality, then one can see that the market is truly large. When one looks at Takaful, sometimes one wonders what are the differences between Takaful and conventional insurance. In my mind, there are 2 or 3 critical differences. The first one is that Takaful, and the word Takaful comes from the word kafala, which means to bind. And because of that, it is a means of communal mitigation of risk. In Takaful, typically risk is shared. it's not transferred. In conventional insurance, risk is always transferred. Because of that, in Takaful models, we have members who are quite central to the operation of the Takaful. In conventional insurance, policyholders have a peripheral role. As far as their claims are settled, they are happy and shareholders take the balance. In Takaful operations, even after the claims are settled from the mutual pool, the members have a right to share in any underwriting surplus. The second difference between conventional insurance and Takaful is that conventional insurance policy funds are invested in anywhere where there is a return. For Takaful funds, the investments need to be made in Sharia compliant investments, and therefore they also share quite a lot with their ethical counterparts, in that investment returns for Takaful funds always come from Sharia compliant investments, which are a form of ethical investments as well. Thirdly, when Takaful members in a Takaful operation, they give their contributions, they give them as gifts to the Takaful pool. They do not expect returns on it apart from payment of claims. So this is quite different from policyholders who pay premiums. And therefore, in Takaful operations, we always call policyholders as members rather than policyholders, and Takaful pools as members' funds rather than shareholder funds. When we compare Takaful operations with conventional insurance operations, we find that one of the key differences is that in Takaful operations, the structure of the Takaful operator is very much like that of a mutual insurance company or a cooperative insurance company. In this, it is really members who come together to try to see if they can share their risks, which cannot be borne by individuals. And it is in this sharing concept that we find the distinctiveness of Takaful. In conventional insurance, there is a risk transfer. In this case, the members do not share risk, they just transfer it to the underwriter, who then provides them with a claims settlement service. So there is no affinity or fellow feeling, if you like, in a conventional insurance company. In a Takaful operation, there is a lot of affinity between members because they are sharing the risk. In fact, at times, and this is one of the key problems for new Takaful companies, when the claims fund is in deficit, then the provider is supposed to give a Qarzul Hasana or a virtuous loan to the members' pool until it could be recouped from future increases in members' contributions. So in a very real sense, members may feel that claiming unnecessarily from the pool will also diminish their own interest and stake in the pool. And this is the critical element of Takaful, that people feel involved in the operation. It is a question of mitigating risk rather than making money or as a purely commercial operation. One of the key features of Islamic banking and insurance companies is the involvement and presence of Sharia scholars. Usually they form part of what is called a Sharia supervision board, which is composed of maybe 3 or more scholars, which try to vet all the operations of the companies and also pronounce on the structures and instruments which are being used and certify that they are Sharia compliant. The scholars also conduct an audit of the operations from time to time to make sure that the way it has been structured has actually been followed. And when it comes to Takaful operations, the role of the scholar or the scholars increases considerably. And this is because in Takaful operations there are 2 or 3 other features which need the scholar's attention. In the first place, most Takaful operations also have what we call re-Takaful, or the equivalent of reinsurance operations. And these need to be very closely monitored by scholars, because Insurance is a very fungible activity, and very quickly the Takaful operators can go into conventional reinsurance and the whole thing can become really a window dressing exercise. The second element where scholars, Sharia scholars are involved in Takaful critically is in protecting members' interests. In the absence of a formal institutional presence of members on Takaful boards, it falls on the Sharia scholars to protect the interests of members vis-a-vis those of the shareholders. Sharia scholars are typically scholars who are qualified in Sharia law and specialists in what we call fiqh al-mu'amalat, the jurisprudence of transactions. And therefore, they bring with them a lot of knowledge about what is permissible in terms of transactions and transaction law within the Sharia. They then come and they try to verify that the processes and the instruments which are being developed for both Islamic finance and insurance providers are in compliance with the Sharia. In this, most of the Sharia scholars also come from areas where the customers are based, and the customers have a lot of trust in the Sharia scholars to verify for them that actually the products are Sharia compliant. The Sharia scholars have a very heavy responsibility in these operations, and their expertise is greatly in demand. In fact, at the moment, one of the critical shortages is of suitably qualified Sharia scholars, and we find that the leading scholars are very, very busy, and we find difficulty in getting enough of their time to do product development in record time.